All right. Welcome. A special good evening to each and every one of you on the call right now. My name is Christopher Ramkisoon, the servant leader of the Billionaire Trading House, and I'm really glad to have each and every one of you with us here tonight. As I said, it's really a pleasure to see a number of our team members on the call right now, taking the time out of their schedules to really be a part of what we're trying to do at the Billionaire Trading House. And really, guys, we're really putting these sessions together each and every Wednesday to really help you to maximize the use of all the tools and services provided by iMarkets Live, as well as to learn from the expertise that the Billionaire Trading House Elite members are really portraying right now. And we really have the type of individuals in our team who are really servant minded at heart. And I'm really thankful that I got a chance to partner with these individuals in business. Because really and truly, I always say to everybody in the team that we want, apart from having the skills of trading, apart from having the skills of building, we want to actually lead and build with the right intention and with the right heart. And guys, once we do this, this is how the business would actually remain and sustain for long periods of time. If we do it right the first time, it's something that we won't have to revisit and have to do it and rebuild constantly. So it's really an encouragement to each and every one of you tonight to have that in your mind. Always have the right intention and the right heart about why you're doing this business, why you're sharing this business. And I always say to people that you need to have a heart for people in order to really be successful on the networking side of this business. Because really and truly, when you're dealing with people and different types of personalities, you tend to sometimes get emotional. And it sometimes tends to discourage you from really wanting to move forward in that direction. But I really want to encourage you guys to really have people at the center of your heart. This is where we are at the leadership in the Billionaire Trading House, which is what you see every single day. We send out trades every single day, helping to keep you profitable because we are really understanding the more service you give to others, it really helps you to get where you want to go in life a lot faster. So really and truly, guys, glad to have each and every one of you on the call. I'm seeing that we have 15 team members. I'm so happy to see this because tonight we want to explore, I believe, something that a number of individuals on the team are really requesting feedback on. And this is also something that we also take into consideration. We tend to go through all the team members and really try to find out what really are the issues that you all may be facing, some things that you may need further clarification on. Let's say you may have something to find out about the harmonic scanner, about support and resistance, about Fibonacci's, about Elliott waves, any single thing that you may need further clarification on, guys. I really recommend that you use the Billionaire Trading House WhatsApp group to really share these comments and concerns, because really as a leadership, we really are wanting to ensure that our Wednesday evening sessions, that we remain effective, in that we're just not trying to have this particular session on a Wednesday just to have it for formality's sake. No, we want to ensure that every aspect that we cover on a Wednesday is something that really is bringing you additional value, and at the end of the day, helping you to sharpen your trading skills. So, guys, I want to encourage you to use the Billionaire Trading House WhatsApp group as a medium in which you can communicate what you may need some assistance on. We really want to foster that type of environment where all concerns are considered, and that definitely everything and issues that are raised, we want to really be able to address them. So tonight, we will go into something really that I believe would benefit the team highly, because as I mentioned, with the Billionaire Trading House signals, we are not trying to take over anything that iMarkets Live is offering, the services and products that iMarkets Live is offering. All we want to do is to continue to provide additional value. So what we want to cover tonight is really the maximizing the use of the Harmonic Scanner, which is a very important tool and a powerful tool in trading Forex, because in having discussions with other Forex traders who are not yet in the company, they are so amazed as to the possibilities that exist with the use of the harmonic scanner. So tonight, we want to really explore how you can really use this particular tool to your benefit, and not just when you see a trade, you just jump into a trade that you receive the signal from the harmonic scanner. No, we're going to go into how you are able to calculate the amount of pips that the stop loss may be set at, that the take profit may be set at, that you can actually do some confirmations on your own after looking at that harmonic scanner pattern or entry that they may have given. You are able to now go based on your own knowledge to go and but use that information to really help you to narrow in on an entry. So really and truly tonight we're going to cover that that information and the harmonic scanner in some greater detail. So I believe that after this session, you all will definitely have a better understanding and appreciation for the harmonic scanner, and really understand how it could really help you to benefit in your trading experience. So tonight, as always, I want to pass you over to one of the top, or the top educator in the Billionaire Trading House. This individual, as I said, guys, it's such a pleasure to partner with individuals who are really leading with a servant's heart, and it's really a pleasure for me to pass you over to someone who has that type of heart, who is really giving of himself on a daily basis to really help you to really maximize your benefit, or maximize the use of the products and services that iMarkets Live has to offer. So without further ado, guys, I want to pass you over to my friend, my brother, my business partner, Mr. Sean Jamat, and he will walk you through some more as to the maximizing the use of the harmonic scanner. Sean, are you on the call, bro?
Yes, Christopher, you hear me?
Hearing you loud and clear, man. The platform is yours. Take it away.
All right. So once again, we want to really compliment everyone for taking the time out to attend one of our follow-up sessions, as we always do on a Wednesday, as we try to consistently keep going. And just to follow up on what Christopher said, this is one of the let's say the tools that a lot of people have. Let's say I wouldn't say shunned because of not properly understanding the use of the tool. Yes, when you are first introduced to the tool, yes, you hear about the purpose of the tool, and as we always say, it's really a guide, it's a trader's guide. Whether you're expert or a beginner in trading, having a tool that can at least identify where the potential turns in the markets are will give your confidence in your strategy of trading a lot more validity, right? So this particular software is not a software or a tool that is just going to give you every single answer with regards to exactly what an entry is, exactly what a stop loss can be, but it really is there to give you a guide. It's really to show you what prices in the market you should be looking at. And most importantly, you must do your due diligence with regards to respecting the structure of the market, meaning that you must take the opportunity, go back and look at the charts, go back and see what the market's actually doing, and you can verify that validity with regards to what the Harmonic Scanner is doing. And the reason for that is because the Harmonic Scanner is robotic software. The nature of the marketplace is not run by robots, right? There's human activity, there's news, there's a lot of events happening all around the globe. So conditions may change a lot. Some one of the most familiar issues a lot of persons may have when they first interact with the Harmonic Scanner is that they may see opportunities predicted or presented to them. They just decide to take entries, stop loss, take profit. Bam, 5 minutes pass, or half an hour pass, the pattern disappear, and the trade hit your stop loss. And the most of the times when that happens is because people just think they give us the answer, so let's just take it, and if the trade doesn't go away, something wrong with the scanner. The scanner is not working, and it's because of a misrepresentation, I like to think, or most importantly, not properly understanding the tool. Right? I always like to encourage individuals as we do these calls is that we're not reinventing the wheel. There's a voluminous amount of information in the academy after the advanced section, totally dealing with harmonics in itself, very explicitly, very simple. Mr. Christopher Terry does it himself. And I've reached the point now in trading where sometimes, Chris, these guys could tell you from when we do our analysis that I could look at a chart, and before we even look at the harmonic scanner for the day, I practically see the pattern right in front of my face because of the fact that I've built the relationship with the market so much that I really truly understand how to ensure its validity, right? And hopefully what I explained tonight would add some additional help, and we will start from the bottom, to understand really how we use the tool, how to navigate the tool, what should we interpret from the entries. We always talk about risk management, what we should think about our stop losses with regards to what the harmonics kind of presents to us. And most importantly, I believe that there are some basic things in forex that you must know, right? You must understand the nature of market geometry, right? A simple thing as understanding that the market operates in trends. The market doesn't operate in a straight line. Understanding a simple thing as support and resistance. I know, even Dave did a very excellent job last week, Wednesday, dealing with the Fibonacci techniques. Fibonacci is one of the tools that really, sets the stage for all our entries and the way we trade, and the harmonic patterns is really a harmonic relationship or a combination of Fibonacci levels, Fibonacci sequences, right? So we'll be touching on that a little bit. So as I always like to say, In order to know where we go, we must know where we come from, where we came from. And the most important thing about Forex, I believe, is that, because of the type of information that we have here at IML, we really don't need to know all the heavy information about how these things came to be. We know that they exist. It's just for us to learn how to properly use them. Right. So just as we start, I'll be switching screens, and so during the course of the process, when I switch, I may ask just to verify if anyone has seen my screen. So I'll do that right now. Just as a confirmation, anyone could write in the chat. You seen the
Yep,
screen?
seeing
All
it,
right.
bro.
All right. Cool. So it's just a little paragraph just to give you a little idea of where the harmonic pattern came from, and why this particular sequence of movements in the market really gives persons or traders the ability to have some high profitability. All right. I'm seeing some annotations on the screen, so I'll just reshare. Right. So, all right. So basically, I'm just going to read from what I have here is that harmonic patterns, by and large, is a foundation of trading concepts laid by Mr. H.M. Gartley in 1932. Right. So Mr. H.M. Gartley wrote about a pattern called a 5-point pattern called the Gartley. Right. This particular pattern has been known to have over 85% accuracy with regards to predicting turns in the market. Right. Mr. Larry Pesavento has improved this pattern with Fibonacci ratios. Even when you go through the harmonic course, Mr. Christopher Terry talks a lot about Larry Pesavento and these guys, because I believe they came up in his generation, and these are the people who he learned his strategies from. Right? Fibonacci ratios and established rules on how to trade the Gartley pattern in his book Fibonacci Ratios with Pattern Recognition. Right? So there are a few other authors, and really and truly, we have about 5 particular patterns that we are familiar with, or let's say we should know. Right? So some of the harmonic patterns that we hear about is we hear about the Gartley. Right? So these pretty pictures, you look at it like a M, or you look at it as a W, or you look at it as a sequence of movements in the market. These 5 movements really give us the ability to understand when to enter the market to buy and sell, right? So this sequence of ratios, once this happens in the marketplace, all the robotic software really does is plots and points out to us where it sees this ratio happening. Now, in order for us to verify the validity of where it's telling us where we can get an opportunity to buy or sell, we must obviously, yes, understand the structure of the pattern, and most importantly, respect the market for what it is doing. And I will explain further what I mean by respecting the market. So some of the basic patterns that we hear about is the bullish Gartley, the bearish Gartley. As you can see, it's just a change in position. So when the market reaches around this D area, this is when it's like a M, it's when you're getting ready to buy, as you say, bullish, or a bearish Gartley, like a W, is when we get into getting ready to offer opportunity to sell, right? So we'll get into it a little more detail as we move on. We hear about patterns called the bullish bat, the bearish bat, or a bat harmonic pattern. We hear about a pattern called the butterfly. We also hear about patterns called the crab. We hear about stuff called the cipher. And those are some basic names with regards to different ratios. And as you would see, all this information is very well explained in detail, specifically for each particular pattern in the academy on the harmonics, where it's just a sequence of ratios, right? So when you look at the pattern, you have an initial movement in the market from X to A, and you would see there's this. If I could zoom in a bit, I will zoom in a bit to just make it a little clearer, right? Um, you would see that there are all these numbers laying around. All these percentages are with respect to Fibonacci levels. As you would see when you use the Fibonacci tool, you have a level called the 23.6, the 38.2, the 50% area, the 61.8, 78.6, and 88.6, 100%, 113, all these different levels, right? And with this particular tool, you're going to use that tool to identify where every particular area in this market or this structure, are these levels respected? And once these levels are respected, you could kind of identify what pattern it is, right? So as we see from X to A, which is your first initial start of that harmonic pattern, you have what we call a retracement of A to B of anywhere of 38.2 to 50%. So all that means, if you take your fib tool, you draw from the low where the X is up to A where your high is, you're looking for this retracement down of A to B anywhere between 38.2% to 50% of this entire X to A run. Then looking now to see the retracement of B to C. So from A to B, you take a fib tool again. You take from the A, which is your high, B, which is your low, and you're going to get a retracement up of anywhere between 382 to 886%. Right? So I'm just kind of going through the numbers of how this pattern is created. And then for your last leg, which is from C to D, to complete this M formation, you're going to take a fib tool from B to C. Right? I will draw it in as we have it when you look at the actual scanner. So you're going to take from this low to this high, and you're looking for an extension anywhere to 1618 or 2618, right? So this is 100. C to D is really 168 centimeters, right? Or C to D could be 261 centimeters. Really just almost 168% more, or 261.8% more than the initial move of B to C, right? So that is it. Also, what the harmonic scanner uses a lot is this particular area, which is the 88.6%. How was this particular area reached? It's pretty simple. You take your fib tool from X to A, which is your low to your high, and the overall move from A, B, C, D, you want to see that entire move pull back or retrace down 88.6%. So once these particular levels are matched up in the market, the harmonic scanner will just pop up and throw at your face, this is what we are seeing, right? So just remember, guys, this particular tool is just taking into consideration ratios from Fibonacci. It doesn't take market sentiment, nothing to do with what the structure of the market is, who are the participants in the market. You know, we don't really have the ability to identify that really, right? But once we respect the pattern, we can then transfer that information into the market and really understand what we should do when we see a harmonic scanner pattern point out us, right? So pretty much, I will be using the online scanner for this particular activity. First, it was always just to appreciate how to properly navigate through the software. So, or this tool, anyone who has access and is a subscriber, you just go to your back office, or you can go to imlscanner.com and log in with your IML username and password. And most importantly, you know, you would have some basic things. So you would have your chart, you will get your entries, you will get your stop loss, you will get your take profits, right? Also, as you see below, we have an indicator here called the RSI, or also known as the Relative Strength Index. So a lot of persons use this particular tool as it helps them identify areas in the market where sellers enter or buyers enter. Simply put, the Relative Strength Index really shows us areas when the market is overbought or oversold. So when the market is overbought, that is a region or area in the market where buyers leave and sellers tend to enter the market. So we expect that the market is going to fall. When it's oversold, meaning that it's to the bottom, I would explain exactly what that looks like. This is when we expect sellers to leave the market and buyers enter, and the market tends to be going to a bullish direction thereafter, right? And the reason why this RSI is here as an indicator is to help you match where the strength of the market is at the moment with regards to where your entries are, to really give you a added confirmation or added comfort in identifying if this particular trade is really right to enter at this time, right? So this is a very simple tool to use. You know, you could always go and research about the RSI a lot. We even had a call that we did in the past. Maybe Chris could post it in the group where we did a training specifically on the different type of indicators that you can use with regards to helping you understand the harmonic scanner. So simply put, this is how you use the RSI. The RSI has two ranges, right? So you can see on the RSI here, I will just go to format. You just click this little down arrow and hit format, and it will bring up an area where you set something called a price line. So anytime the market moves above 70 or moves above 70 in the RSI indicator, this is where we consider the market to be overbought, or where we should start looking for opportunities to sell, right? Some persons like to fine tune it. They change it to 80-20. I think 80-20 is a very good value that adds a little more, as we call it, a little more tightness to the confirmation, because if the market really goes over 70, above 80, you know, the market is really setting up for a big opportunity to sell, right? So, for this purpose, you would leave it as, you could change it to 80/20 to just to see what that means. And below, we have the price line of 30, which is the lower line. When the market drops under 30, we consider it to be on, or we say oversold, right? So you would see that as I change the numbers in the market, you have the 80 value on your right here under the RSI, and then you have what we call the 20%, 20 level, right? So generally this is just stretching it a bit. A lot of traders like to do it. They know they want to see it. If it reaches 80, then for sure they are confident that this is the right time to sell, right? So, but just for this exercise, I would just put it back to what the particular um, indicator is typically used as, right? So as we see, looking at what is happening in the market right now, when the market was pretty much in an area of being, let's say, oversold at this point in time. This was around, if you look at the mouse, you would see a little time scale. This 17th of the 11th, which is 17th of November this year. Excuse, right? You have this you had some bottoming of the market here, like almost three areas that touched or respected this level. And you could see that over that period of time, if you just look at the cursor, we had an opportunity here where we could have entered for a short-term buy of a few pips, right? There's a little measuring tool here on the left where you see this little L-like ruler with candlestick. So you can take your candlestick, touch the tool, draw up, and you can pretty much calculate how much pips that was, right? So that little move there was about 38 pips from A to B, right? So I'm just kind of giving you an idea how the RSI can assist with entries as well, right? The times in the market when the market was pretty much oversold. Let me see if I can readjust this. All right. All right, let me see, AUD USD. Right, so this is when the market was pretty much almost in an area of being overbought. If you look at just looking at the cursor, leaving the mouse, you see that from that period moving downwards, you had a nice little downtrend, right? But what we're really looking for is to see the market above this 70, or at best around 80 or above 80, right? And when we see this happening, this is when we are really paying close attention to where our D is, the end of our harmonic pattern, right? So just to go over what this pattern is at the moment, we have what we call a shark pattern, right? So this is the currency AUD USD, H1 time frame. Everybody should know what that is. Every candlestick represents how price move in an hour. The shark pattern, so all this means is that these ratios of this pattern has lined up and has qualified to be called a shark pattern, right? So the Gartley has its own ratios, the shark has its own ratios, etc., etc. And based on the ratios, this particular pattern has identified to us a particular zone where we can enter the market, right? So this particular zone is where we have two entries. And a lot of times I preferably love to see these particular entries because it gives me the time to use what I call patience, to execute some patience, right? Also, it gives you a stop loss, it gives you a take profit, right? The easiest thing and the most important thing that everyone should do when they see these patterns is, upon doing whatever you need to do to confirm if you're going to take that entry or not, is pay particular attention to where your risk is with regards to your entries, right? So your risk is how much pips this is calculating as a stop loss from either entry. So if you're going to take the highest entry, your risk is about 12.7 pips, let's say 13 pips risk. If you're going to take the lowest entry, your risk is about 30 pips flush, right? So this is where it gives me two options. At this particular point in time, looking at how the market is set up, right? I see that the market, with regards to the RSI, is in the area of, let's say, being overbought, right? The market is overbought at this moment. Right, so the market is overbought at this moment. So at this point in time, I'm seeing that right now my D, which is the area I'm looking for to enter, is pretty much right in the zone of my entry, right? Most importantly, plain and simple. Once you see entries above with a stop loss above, you know it's an opportunity to sell. Once you see entries below and a stop loss below, you know it's an opportunity to buy. No big big maths in that. So that's, you know, just keeping it simple. So we know we're getting set up for opportunity to sell. So this gives you the opportunity to do many things, right? This gives you the opportunity now to take into consideration what particular trade I must execute to capitalize on this particular trade, right? I for my trading style, I try to keep a consistent 30 pip risk, meaning that wherever I decide to enter, I will set a stop loss around 30 pips above or below, which I believe would give me some good coverage or a good breathing room, as we say, to stay in that trade until it goes my way, right? And because of the nature of how this trade is set up, having a entry, your lowest entry, and your initial stop loss exactly about 30 pips apart, I am confident doing a trade called a buy stop. I mean a sell stop, sorry, right? A sell stop, right? So if everyone here should be familiar with the different trade types we have pending trades or pending orders and market executions. Market executions, we just hit and buy or sell. Pending orders is we have the ability to set a trade in advance, waiting on a particular price to be met before it's activated, right? And when you do a buy stop, you pretty much just get the ability to let this trade fall its way down, and when it decides to pass through your entry, right, when it decides to actually go through your entry point, then you will be entered into that trade, right? Because of the fact that this particular market is set up in the way it is, having been in an area of just using this indicator only, I am pretty confident in doing a sell in this as is. Some persons see the trade as it is, they do market execution, sell, and jump in. For me, I may do a sell stop story at the lowest entry because the market may just consolidate and chop around here for a little while. Right? As we say, with consolidation, the market may just move down, it will then decide to push back up. Right? It may just move around there a little bit in the market, waiting for some particular condition to happen before it really decides to go where it wants to go. And that way, even if that happens and the market decides to go and hit my stop loss, I know because I've entered at an area that is pretty safe, my trade never activates. I haven't risked anything, right? So this is just a simple way of using one indicator, the RSI. You just wait for it to see it in a particular overbought condition or oversold condition, and then you look for opportunities or within that range to get a good price to enter, and you enter based on where entries and stop loss are, right? So that's just a simple way of using that particular indicator only, right? If I could go through to our next maybe another pattern to see if I see a buy, maybe we may be able to throw our eyes on a buy, right? So this is NZEJPY, right? So this is one of those, you know, like I said, the indicator in itself is not the golden ticket to every answer. But what it does is a guide. And, you know, with trades like these, currencies like these, we must always go back to respect the market. So the only reason why I'm really going to this particular pattern is just to show you the difference between a buy and a sell, right? So you have your entries below, your stop loss below, giving you the opportunity to buy. And we could pretty much see that the area where we have our D was a good zone to enter, a place of interest to look forward for opportunity to sell. I mean opportunity to buy, sorry. Now, me personally, if I'm just using purely the RSI, I would look at this particular pattern and be like, you know what, let me wait. I want to see the market come much lower. The market may have much lower to go. And why would I say that, right? When I see candlesticks like these, right? When I see a candlestick like this particular candlestick here, right? So this is something you call price action. Candlesticks reveal a lot of information about what the market is doing. And even though you may have entered, you know, you hit TP1 if you had entered, if you caught this particular pattern at the right time. But when it reached TP1, you saw this long wicks and short body, meaning that the market opened here at this price, pushed lower, pushed all the way up, and for whatever reason, it came all the way back down. So it just points out to me that there's some kind of resistance happening at this particular level. Okay. And sometimes people, when they enter the market, they may come and see that, decide to jump in on a market execution buy. You know, it looks good, it's already on its way. And when they jump in, it just starts to go back down, right? And because of the fact of the matter is, just on observation of watching something as simple as a candlestick, I could see that right away this particular area in the market has some resistance there. For whatever the reason, every time the market tries to come in this area, we're seeing a lot of long wicks. And you seen it. Push up, pull back.
Yeah.
Push up, pull back. Push up, pull back. Push up, pull back. We've seen a lot of that. So to me, price action is telling me, let me execute some patience. I may see that this particular trade, this particular currency, the market may just decide to push down. And for all you know, your RSI might follow the same pattern. It may push a lot lower and come closer to where you would want it to be. And then you may get a better time to enter. And when I see the market, anytime I get harmonic pattern trades where I have double entries, I love to use stop trades a lot. I want to see it come anywhere within the zone, and I would execute using stop trades a lot. And in this particular case, using a buy stop. And the reason for that being is that if for any reason this particular trade continues to go against me, in the sense that it is not going in the direction I would like it to go, which is a buy, and it continues going lower, and if the harmonic pattern disappears, that happens. Sometimes you get entries, it continues dropping lower and lower and lower, it goes through your stop loss, the pattern disappears. But because I've executed a trade that has kept me safe, which is something called a buy stop, I know for a fact that I have not risked anything because my trade did not activate, right? So I know a lot of times when people come in the market, they see the harmonic pattern, they say, hey, this thing is going up, we have a nice blue candle, they jump in, and watch what is happening now, right? And just for you to be mindful, if you do a simple pip count, just of this wick only, this entire wick, could have you at a drawdown of about 12 pips, depending on where you see where you found the market. JPY currencies are currencies that have high pip counts, right? And again, you want to pay particular attention to where your stop loss is with regards to your entry, so that you may be a little more sure or a little more principled with regard to how much risk you would want to take, right? So you know from your stop loss, your lowest entry is about 10 pips and the highest entry is about 21 pips, not too much risk, right? So just for me personally, I would like to see this particular currency maybe fall a little bit lower and then re-enter, right? If it is you have a little more confidence in a strategy and you have some equity in your account that you can rally out the trade, even if it decides to go lower, you can execute what we call as a buy limit, right? By now, I believe everybody should understand the difference between those trade types. Pretty much if the market decides to fall from where it is at the moment and it comes to entry, you're going to use the highest entry as your entry price. You're going to execute the trade as a buy limit, and as soon as it decides to turn up, then you would start seeing some profits, right? So simply put, it's like bouncing a ball off the ground when you do a buy limit, right? So this is just a simple example of just looking at what the market is doing when doing entries. So what I'm going to do now is kind of take it a little more in depth, right? This is something that I particularly do, that because of what I've learned, what I've seen, and as I call it, is actually respecting the structure of the market and looking at what has actually happened before I make a determination of what am I going to do with that particular trade, right? So pretty much, I'll go back to one of the currencies that I had before, which was the AUD/USD, right? AUD/USD, I like how this particular trade is set up at the moment, right? With regards to just looking at the basics, which is understanding the use of an indicator, looking at where the entries are, looking at my risk, not too much risk, 30 pips from the stop loss to my lowest entry, about 12 pips or 10 pips or how much it was between the lowest to the highest entry. So I like what I see based on just, those simple numbers. It is within my taste. So now I want to take it to another level, which is I'm going to actually look at what AUD/USD is doing before I actually determine if I want to get into this trade or not, and understand where this trade is in the market, right? So what I'm going to do is I'm going to transfer across to MetaTrader 4. And well, just for ease of use, because this is one of the softwares that I love to use majority of the time, for you to get a grasp of how it is I look at the particular trade in understanding the entire structure of the market, right? So most importantly, what I like to do is something called a top-down analysis. I look at the market from a longer-term perspective to understand where the market might be heading and then come down to lower and lower time frames to see what the market is doing in the moment, right? So pretty much what we can see when you look at a daily time frame is during the period of, let's say, if you use your mouse, you would see you have your time scale below your price on the right, around the 12th, the 23rd of December last year, just before Christmas. Since then to now, overall, we have been seeing an uptrending Australian US dollar pair, right? It has been moving in a cycle where it has its highs, its lows. As we see, the market never moves in a straight line, but we can see consistently nearly over a year, the market has been moving pretty much in a as we call a bullish direction, right? So one of the things I like to do when I see these things is I draw something called channels or trend channels. It's really just the ability now to see, to understand, to identify a range the market might be bouncing around in or respecting. And also, this was one of the pairs that in the past, sometime in the past when we did a training, the same training on the indicators on the RSI, we were looking at this particular pair at that point in time as a very, very strong area. At the point in time, what we were seeing is that we were around here in the market, right? And when we used our RSI, what I can do is I can pull it up, show you how to get it on this particular trade, just to kind of bring it from the past to where we are. Um, you can go to the market watch or the navigator screen. You can look for all your indicators on the screen. So you look for your oscillators. You would see relative strength index around here. You just drag and drop it. I already have my parameter set 80-20. And what I can do is during that period, I will show you exactly what we will see, right? So I'll just remove this indicator just to make things a little more clearer. And during this period, what I'm going to do is identify for you exactly how a simple tool like the RSI can assist with showing us where the market might be going, right? So what I can see clearly is that while in the actual structure of the market, at this point in time, we had a consistent uptrend. We had some higher highs, lower highs, higher highs, lower, well, as we said, higher highs, higher lows, higher highs, higher lows, uptrending market. We got a correction, then a pushback up to a little higher area in price. But what we are seeing is that while we are seeing this uptrend, I could draw this line just to show this uptrend, the RSI is doing the opposite. So I would believe everybody should be clearly seeing that, right? You could just comment in the chat if it is, you say yes or no, just for me to get an indication that you kind of understand what I'm pointing out to you. This is something that is called divergence, meaning that the market is actually parting ways with what a simple indicator is doing. You could either have something called convergence or divergence. So RSI actually helps identifying that, right? So this particular indication of divergence is showing that the market is setting up for a turnaround. So at that point in time, all right, guys, thanks. All right, so everyone is clearly seeing that. You can clearly see that we have a high, a higher high, but when we look at the RSI, we see now a high close to our 80, which is really stretching it a bit, fine-tuning the overbought area in the market. And when we saw the market came down, it retraced up and went back a little higher, but we got a higher low on the RSI, showing that while the market is deviating down on the RSI, the actual market is still going up. So seeing that, I at that time called out that, yo, this particular currency is setting up to sell, and we will have a move at least back to this particular area in the channel, right? So simply put, we have it bouncing around pretty nice in the channel, one particular tool giving us how to identify a trend. And based on this indicator, we are seeing that we're having a turnaround coming. So anywhere at this level, you can do a sell and confidently stay in the sell for almost about 400 pips drop, right? So that pretty much did that and even more, right? It fell 500 pips, right? So understanding that there is a heavy, heavy bearish momentum in the market on a long term, on this perspective, long term, it has broken out of my uptrend. I must take into consideration that, let's see what the market is doing before I really take that opportunity to sell. And is it lining up with what the market is actually doing? What is our harmonic scanner telling us? Our harmonic scanner is telling us that we are lining up for opportunity to sell, right? So just seeing this breaking out of this uptrend is letting me know that I've left my buying zone into a sell zone, right? So as we go down to the 4 hour time frame, what we're going to do now is really look and see what our major trend is at the moment, right? So we can see that if we, by simply drawing what we call, a trend line, you're going to connect all the highs in the market, all the areas where we have highs, to see levels of support or resistance, right? So simply put, this is a simple trend line, just straight off the eyes. We have a particular high here, market pushed down, corrected, respected the trend line, moved down, corrected again, but and for at this point in time is making its way up, approaching the trend line. So by simply understanding a trend line, a trader based on technicals would wait to see the market actually reaches up, touches the trend line, and decides to sell at that point. And the reason being is because this is what has been happening in the past, right? You always look left to go right. You always look at what has happened in the past to understand what to do next, right? So just like when you're looking at the daily perspective, every time the market reached to the upper part of our channel, made a similar double top, it sold off. It came into the future, did the same thing again, double top, and sold off. And this is why we always say, we always look left to go right. So looking at how the market is set up, looking at this particular trade, I'm saying, you know what? When I see this particular currency move on its way up to the trend line, respects this trend line, I would be pretty much looking for opportunity to sell from that point, right? That's just using trend lines alone. So when you go down into hourly perspective now to see what the market is doing, pretty much we could see that there are trends within the trend, right? So we know overall we have a downtrending market, right? So if we come down to the hourly time frame, we can even connect all these highs that we have been seeing consistently throughout time to understand what the market could be doing at this point in time. I remember when we took a look at this particular pair, again, just by simply drawing a simple thing as a trend line, we are seeing that the market is coming lower, pretty much respecting our trend line. Every time it touches the trend line, we get an opportunity to sell. And finally, it broke out, letting me know that I've left my sell zone, at least on the intraday perspective, into a buy zone, right? So meaning that when it broke out, I waited for the opportunity for the market to retrace for an opportunity to buy, right? But for me, looking at the entire structure of the market, I would like to see this currency move all the way back up to respect my trend line before I decide to sell. That's just me. Why? Because I'm actually looking at what the structure of the market is actually doing. I'm not just going to say the harmonic scanner says buy or sell, jump in, right? The reality of it is that if we understand what the market is doing, we can understand where we can be a little more precise. And what I also remember as well, if I cycle back to the scanner for a bit, is that this particular pattern, when we were watching it at the morning, on the morning, it actually came up somewhere around this zone here, where we have this wick, this, as we call it, a doji. This is a candlestick where you have a very short body and long wicks. It's called a doji. And at the time, it pointed out, this is the time to sell because the ratios lined up for a particular pattern. But when I saw the market for what it was actually doing, I saw this long trending line, this breakout with these bullish candles as an indication that the market is starting to turn upwards. So I would say, for me personally, I am waiting for the opportunity to buy. So even though the harmonic pattern showed me that there was availability to sell, it only sold off to like TP1, if I remember correctly. But because of what I've been seeing in the past, I didn't really take that opportunity, but took the opportunity to buy and was able to secure some good pips moving upwards from there, right? So this is just to kind of bring it from where the market is to what we are doing right now, right? So when we look back at the particular market, what it is doing at the moment, we understand that we can look at our entries on the harmonic scanner to be a little more precise, or at least respect what it is showing us. So we know the two entries that it gave us was 0.76171. So I'll just draw a horizontal line. So 0.76171, I believe, was our first and was the highest entry. I'll just change the color to green just to give some more. I always like to go back and actually draw it in for myself, just to have an appreciation for what it really is. The lower entry is 75996. 0.75996. We could always fine tune it if you need to. It's 76171. All right? Our stop loss is 76296. Change this to red. Right, 76296.
I want to know some movie. Baby Java, like, she see that in movie. That's real good, she said.
Horizontal properties. And so it's 76296, 76296, right? Right, so that is just to give you a visualization of where the actual pattern is in terms of the entry, right? So our pattern, based on the harmonic scanner, is here. Insert shapes, triangle from here to here to here, which is the first part of it. This is the X to A to B. Insert shapes, B to C, the extension of D, right? Right, so this is just to kind of give you a visualization of where this particular harmonic pattern is at the moment. Right, so looking at the structure of the market in its entirety, you know, looking at from the hourly perspective, the intraday perspective. Yeah, good night, Dave. Yeah, so yeah, looking at the intraday perspective or the hourly time frame, we are seeing that we have some consistent downtrend happening. Every time the market respected around this trend line, it finally broke out, and it gave us almost like what we call a to B to C, or A to B to C to D pattern, which is a bullish move up, a retracement, and a similar length of move up, and really completed the correction of this particular downtrend into our entry zone, which gave us that harmonic pattern, right? So, right, so looking at the Fibonacci tool, what I'm going to do is actually zoom in a little bit. If anyone is not seeing anything, you can just indicate. If you need to be a little clearer, if I need to zoom in, just say so. And I really want to show you exactly how this entry has come about, right? So this particular pattern that has been shown on the harmonic scanner is something called a sharp pattern, right? So for simplicity's sake, if you want to go back to the let me see if I can find it just to show you the sharp pattern forex. Let me see if I can get one for you quickly. Stop share. Right, so this is a little illustration of a just indicate everyone is seeing this this web page, right? So this is a shark pattern. So this first one, which is similar to what we have, is the bearish shark. So we have our initial move O to X, then we have our retracement to A. It have no particular retracement percentage, it doesn't matter. But where the pattern gets interesting is from X to A to B, you must have a retracement, another retracement, but an extension of 113 to 1618. And between A to B, you must have an extension up to 1618 or 22.4. If you see these levels here, what we have 0.886 to 1.13, which is 88.6% or 113%, is really, what that really means is if you take your fib tool from O to B, the highest point of this or the start of the wave to the lowest point, and you get the extension up, you would find an entry zone anywhere between 886 and 113, right? So that is all that means. So if I go back to my MetaTrader 4, I took my fib tool, I drew from high to low, right? Looked at where my 886 is and where my 113 is, and it fell flush on the entries given. The reason why I drew this is just to show you what the harmonic scanner is using to find those entries. It is not using anything dynamic. All it is using is Fibonacci ratios, a sequence of ratios, a particular strategy that has been respected in maths. And like I said, in maths and in the world, in science, this is something that Dave did an excellent job, as you always say, on last Wednesday's call to understand the nature of fibs and how important Fibonacci is. And this is all it is. Right, so it is not a golden ticket to any particular profitability with regards to just plotting numbers. But what you must always do to keep yourself safe is that you must always go back to the market and look and see what the market is actually doing before you decide to enter any particular trade, right? So what I like to do as well is that from my perspective, because I've been seeing in the past the market has always came back to respect this trend line, I would like to see that happen before I sell. And it's just me. I won't pick that harmonic pattern scan, that pattern just like that. Even if, as we see in the RSI pretty much coming close to our 80. We've seen indication that the market is preparing to sell. We are seeing that we have a very strong bearish candle. We saw this candle push up, it got rejected. We're seeing another red bearish candle. We see a lot of indication that we gain up for a sell. But nothing is stopping the market from just making a short retracement back and then finally pushing its way up to respect this trend line. Right? This is just based on structure the market, looking at what the market has done in the past to understand where I need to go next. Right? And for me personally, when I see these entries, I pay particular attention and would rather wait, execute some patience to see at least a completion of this pattern, of this respect for this overall downtrend, this long-term downtrend, before I take the opportunity to sell. Right? So I would just remove these lines just to remove any confusion with regards to what we are seeing here. I just drew it just to identify where our entries are. We can have a good idea in our minds. We are right around the zone. One of the most important things that a lot of people do, as well as incorporating trend lines, is understanding areas of support and resistance. Right? So I believe this is one of the key fundamental things to understand in anything you're doing in trading. A lot of times, the market will always respect certain prices and either move in a bullish or bearish direction. And once you are able to identify these zones, it makes trading very, very, very easy. Right? And an easy way to identify any area of support or resistance is pretty much an area of support, or as we call it, a floor, is a resting place, an area in the market where the market price seems to reach and has not, for whatever the reason, doesn't want to break it. And an area of resistance can be an area in the market where when the market reaches that high, when the market reaches that particular high, we could say, just to draw this down, we have a little range here. When the market reaches this high, it sells off. When it reaches this low, you get opportunity to buy. So if you're getting resistance at the top, as we say, this is where you have an area of resistance. If you're having some support or a resting place, it is called an area of support. Area of resistance is also known as a ceiling. Area of support is also known as a floor. And a simple technique that a lot of traders use is that they wait for any one of these levels to be broken before they actually make a determination of what particular type of trade they would want to execute to enter. We could have seen that in this particular range, the market has been consolidating, moving around in and out of this range. When it finally decided to break out the range, what did it do? It came back and actually respected this particular level right around where my trend line started, and was really giving me a key zone to look for opportunity to sell, and I could have sold so long term. The reason why I'm going through all of this is to share the logic. What is the mindset behind going to confirm why it is I'm looking for opportunity to sell? Is the price, the Harmonic Scanner is showing me right now the best price to sell? And that is the point I'm trying to get at. Right? So when I look at the overall trend in the market, then I come back to seeing there are strong areas of resistance, area of support, which has now become resistance. It was once support, it was broken, retested as resistance, and now the market is actually approaching this area. So based on having seen these levels broken in the past, every single time this level is broken, it is respected. Every time the level is broken, it is respected. I can draw it in to make more sense of it. Every time the level is broken, an area of support becomes resistance. Every time an area of support has become resistance, is opportunities to sell. Right? And what I'm seeing is that I could be seeing, or this market is pretty much setting up itself to make a last final push up to respect this area of resistance before it really takes its next dive or its next move. Right? That's the logic behind the way I approach using the Harmonic Scanner, or approach looking for entries. Like I said, the Harmonic Scanner is really pointing out to us where the market is really going. Yes, the sell is coming, but is the price given really truly the right price in the market to do that sell? Right? And from my perspective, I would execute some patience, right? That's just my honest perspective. I would execute some patience and wait to see this market push up a bit, come back and respect my trend line. Most likely they'll respect that trend line right at this area of resistance that was one support, which to me is a strong confirmation of time to enter the market for a sell, right? Nothing would not prevent me and say that, you know, do not do the sell from here. But what I would like to see that would confirm to me if I should really take this sell opportunity, if I switch back to my harmonic scanner, switch back to my harmonic scanner here, I really and truly want to see a strong, very strong indication from the candlestick formation that this market is really truly gearing up to sell and to sell heavy. Meaning that if I see a very strong, you see like how we have some these strong bearish candlesticks in the past, if I see those form, clear out my zone, all I'm going to do is wait for it to push down lower, wait for retracement back up into the zone, and then I would look for opportunity to sell. Right? Not just because there's a zone pointed out to entry, you see some red candlesticks, I'm going to jump in and do a sell. Right? I need to see this. I need to see a very strong bearish move, maybe a retracement back into the zone before I decide that, you know what, yes, now I'm going to look for the opportunity to sell. You would learn to realize that with the harmonic scanner, all it really takes is some patience. That is all. Once the market sets up in your favor, you want the market to come to you. Right? I have two options. The sell is still on. I've given myself two options. I wait to see the market fall lower, retrace back into the zone before I sell, or I wait to see the market move higher to respect my overall downtrending line. Either or happens, my bias is still to sell. And that is what trading is about. You're giving yourself the freedom and the options to allow the market to come to you. You're not just, like I said, it's not about just seeing numbers and saying, you know what, jump in, buy, jump in, sell. Right? And that's really the logic behind why and how you use it in a practical sense, right? So understanding the structure of the market, seeing what the market is doing from a long-term perspective, understanding that the entire sentiment of this market from a daily perspective is bearish. It has broken out a strong uptrend that has been going so for an entire year, almost a year. The mindset is to sell. Sell all day, right? The mindset is to sell all day. Right? But you must always understand that even though the harmonic scanner has given us these entries, we must pay more and closer particular attention to exactly what the market is doing so that we can have a greater appreciation for why we do what we do, right? So that's just my interpretation of the way I take it up another level with regards to the analysis behind using this particular tool and you know what persons do as well. You know, one of the other things that a lot of individuals use as well to help with entries is that the Fibonacci tool helps a lot. And when you look at what the market is doing, and if you draw your fibs from this high to this low, and you're looking at where price is retracing to, a lot of traders like the 618 level, right? The 618 this 618 zone or the 618 level is a particular level that a lot of traders are interested in, because when they see this area being respected, it gives them a area of strength or a stronger confirmation of where they can enter to in the direction of where the market is headed. And when I see things like this, you know to identify a previous high to a previous low. You draw your fib tool, you see it retracing up 618. Right, the 80-20 rule, as Dave indicated. If you want to learn more about that, go back and look at the well, you know, we might be able to post it on YouTube channel and make that provided for everyone to add who may have missed it. And that in itself as well gives a trader who may be using fibs only that this is a level I would be interested in looking for the sell. 618. The 618 is close to a strong area resistance. 618 is right around the overall downtrending zone, right? Based on the 4 time frame, we kind of narrow in a zone. So once I see, for me, the market reaches up there, insert shapes, I'll just insert a little highlight in there just to kind of make it a little more clear. Once I see the market reaches up in the zone, you know, maybe a person using fibs would say, you know what, then I would be comfortable looking for that opportunity to do a sell. So the market may consolidate, chop around for a little while, you know, not really do much, and then finally decides to move the way you want it to move, and then bam, you ain't get that sell yet. It moves up in the area, and then you get a strong downtrend, a strong sell, a strong rejection of that trend line. Right? I've seen this happen time and time again in the market, right? Just because the market just has particular levels it likes to respect before it makes its next move. And when you have that appreciation for what the market is actually doing, you are basically trading more comfortably, allowing the market to set up the way you want it to be seen, the way you want it to look, right? And either way, whether you take this technical way, the longer route, the harder route, some may say, the route of really understanding what the market is actually doing before you just jump in any particular trade, or you do a simple thing, wait for the candlesticks to reveal to you what the market is doing. Wait to see that a strong bearish drop. And when you get that drop, it may retrace back up with the entry zone, and then you can enter for the sell. Right? You'll be a little more comfortable entering for that sell. Right? One of the most important things as well is that if you understand market geometry, anybody watching this particular market right now for the overall downtrend from a daily perspective could see something forming pretty easily. And I know normally I'm not the one to really put people on the spot to test people, but for anybody on the chat, anybody on the call who may understand what I mean when I say market geometry, just looking at what the market is doing right now, could anyone tell me if there's any particular shape that they see, anything that looks familiar in this downtrend? You always say the market never moves in a straight line. If anybody wants to take a chance, is not gonna bite off your head. It's just to see, maybe you be seeing something I'm not seeing, but it's just to be a little more, interactive, right? With regards to what the market is doing. Anybody in the chat could say, what they think they might be seeing with this downtrend you're seeing forming here. All right? So anybody, any takers, or experienced guys, the new guys, people are just learning anything.
What is the question?
The question is, based on the current downtrend we are seeing in the market, is there any particular familiar shape that you are seeing forming, or something that you could point out? Anything that you are seeing? I'm seeing
At the top, you see the harmonic pattern. Ask me the name I do.
Right. Which harmonic pattern you meaning where? You meaning
the bear one.
Alright, so I'm seeing Danila Hercules saying a head and shoulders. Alright, so what is giving you that head and shoulders? Are you saying that maybe this could be a left shoulder, this could be a head, and then we could be getting a right shoulder? Is that what you're saying, Danila? Alright, so what she's saying is basically this. So she is saying that she's seen a shape like this. This is your left shoulder. This is your head. Potentially, this is your head. The head could come all the way back down to here, and then it could be forming overall to finish off this head and shoulders, this big head and shoulders pattern that she is seeing, just based on the market geometry, that you can get her move back up into here, and then it fall again to finish off, right? So this is projection. This is not what the market is actually going to do. We are just trying to see what familiar shapes, right? So this is a good one. Right, this is something I honestly I did not see that. This is a good point out, right? I wasn't really indicating that, but that is excellent job. We need to put in the elite. We need to get you up in the elite, Miss Denita. Right? So this particular formation is pretty familiar to a lot of people, where we have head and shoulders, meaning that the market could be turning around. And imagine understanding just a shape in the market could help guide you with regards to what the overall trend could be. So all I'm showing is that there are multiple ways to confirm that this market in this particular phase at this particular point in time is very bearish. It is the trade with the trend. We are looking for opportunities to sell. But the right shoulder formation would be confirmed by retest at the back of the uptrend line. All right, so if yes, all right, so meaning that if it touches this overall uptrend, what Dave is saying, maybe it may rise higher and then fall, could be, right? So this is a nice little point out here that potentially the market could be doing this form, this shape. It has already done 2/3 of it, right? Making a left shoulder head and could fall all the way down to this. This is a strong area of support because we are seeing what if you look into the past, look left to go right, join one horizontal line, we are seeing an area of support. 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 We are seeing an area of resistance, resistance, resistance. So it can clearly be shown that in this market, this particular level of price is continuously and has been respected a lot in the past, right? So what I'm pointing at really is that the previous high to low seems to be completing an Elliott. That was the answer I'm looking for. Correct is right, right? And pretty much in an Elliott formation, we have an initial push down, then we have a correction from 1 to 2, then we go from 2 to 3, then we go from 3 to 4, and then we have a 5-wave down, a 5th wave, which could complete our Elliott wave. It could end up anyway. Right here as well, we have some resistance, some support. Right in the midst here, it may fall just as low as here, right? So pretty much I kind of see support and resistance like nothing. So if I'm moving too fast, just let me know. This level that I've just dropped out of nowhere was based on action of price, right? So if I remove and just showing you the lines only, not the candlesticks, you're seeing here is an area resistance, here's the area support, area support, area support, area resistance, right? Putting back the candlesticks, these are some strong levels on a daily perspective of where the market areas of respect are, right? Just simply join horizontal lines, support resistance. So what we can see or potentially see is that yes, we are forming the 3 to 4 leg of the Elliott wave. And that 3 to 4 leg may come right up into our zone, which we were looking at from in the past, from in previous, as a particular interest zone to do our sell. Pretty much, right? So I am seeing many different ways, seeing many different shapes, many different formations, multiple ways to see the same piece of information. But again, the key of it all is that we have understood simple things: support resistance, understanding the trend, looking at the market geometry, whether we see head and shoulders, whether we see Elliott wave, whether we see an ABC correction, whether we see whatever it could be, right? And it's because of applying these simple tools, then you can be a little more confident with regards to what you're going to do next. And I would not be surprised that I see the market push up, respects this trend line, and then decides to fall. And fall to complete your 5 wave, which is 3 to 4 to 5. Right? And obviously, just looking at the structure of the market, this is nowhere where our entries are right now in our harmonic scanner. The harmonic scanner is right in the sense of indicating to us, hey, look out for a sell. But is it really truly the right price to get it done? And even if it doesn't even reach to here, what I want to see is that this market plummets hard, makes a pullback, and then I jump in for the sell. So for either or, I'm just waiting for the market to come to me. Nothing else, nothing more. Right? So that is pretty much the way I did the harmonic scanner. This is just a prime example, one of the examples where you intertwine all the knowledge that is accessible to each and every single individual on the call via the academy to really give you appreciation of what can be done, what should be done, and how to do it when trading the harmonic scanner. So you can use the RSI only. Some persons like the RSI only. It works very good. You want to see the market overbought before you do anything. You want to see it oversold before you do anything in terms of entering, right? Then there's me, where even though I get that particular entry, I still want to look and see what the market is actually doing before I make my selection of what particular entry I want to enter in, right? So that pretty much handles as far as going into the dynamics of the scanner. This was just one opportunity where I believe is a perfect sell. Everybody they could use either method to profit from that trade, particularly maybe tonight into tomorrow. Well, I believe tomorrow is Thursday, so we will have one more Asian session we could capitalize from. And look forward to maybe having the opportunity to jump into this. So you have two options. You can either wait to see the market comes up into the zone before you decide to sell, or you can wait to see the market really falls heavily, makes a retracement, and then you can enter for the sell to continue. Because remember, and let me show you this, we are looking at the entire nature of the market. We are seeing either, like Daniel said, a head and shoulders pattern being formed, meaning that this market can fall all the way down to here. Or, like what I'm seeing, and Randy pointed out, we have an Elliott wave being formed, right? So, which you have a 0, you 1 to 2 to 3 to 4, then you're down to a 5, right? All in all, it shows us that the sell is on and we have a drop of about 140 pips in the short term, and long term, it could be 305 pips, right? So even though the harmonic scanner is showing us we have TP1, TP2, TP3, this particular pattern can go way beyond TP, all these TPs, right? So even when you appreciate the market, you can realize that there's much more to be earned from just what the harmonic scanner is selling. So this is not to deter you from what you may have thought or what you think the harmonic scanner does, but when you fully utilize your knowledge with this tool, it makes the trading experience much easier, right? So that pretty much takes care of it. I'm not sure if anybody else. I just saw. I know Dave is on the call. I don't know if he had anything in mind that he may have wanted to add or wanted to mention that that might add more value to what we are doing here. So that pretty much takes it all for me. So Dave, are you on the call?
Yeah, Sean, I'm here. Hello, good night, BTH. I just want to say it's an excellent job by Mr. Sean Jamot. We don't want to make it too complicated tonight because a lot of people are on the call are newbies or basic traders, so they don't overcomplicate it. But in addition to what Sean just said, just using the harmonic scanner, incorporating that strategy with a couple of simple indicators, MACD, RSI, counter trendline breaks, trendline formations. Just basically, guys, we're gonna keep it really simple. We want everybody to find a simple yet effective strategy and just stick with it over and over and over again. As the harmonic scanner appears, it does not mean, and I just want to re-emphasize, it does not mean you just buy and sell automatically. As Sean says, you have to wait for the setup. Do not rush the market. Do not dive into trades without thinking, the checklist being thought out and checked, so to speak. We just want to keep it simple, but patience is key, right? So I don't want to add anything right now, Sean, because I don't want to overcomplicate it. But you mentioned fibs. Fibs is actually very useful once to get the harmonic scanner patterns to run. Some of you may be familiar with the fib formations, and that would actually help you to find a TP in addition to what the scanner puts forward. But I don't want to go into that now because that's not what the call is about tonight. But I think Sean did a good job, and that's it now from my end, Sean.
All right, Dave. Well, thanks again for just adding some more perspective on it. And that is it pretty much, guys. We really want to thank everyone for coming out and hoping that this added some more information, added a little more clarity, added some understanding to how to properly utilize the tool. And anything that you would like to talk about, message in the chat, your feedback, what you think, if you enjoyed the training, if you learned a lot, whatever it could be, if you need more help, anything that you think that you need more guidance on in a session like this, feel free to mention it in the chat. And we could take it up from there and delegate individuals to handle, based on their strengths in this particular area of forex, right? So what I'd like to do is just hand it back over to Mr. Christopher. I'm soon to close the call.
All right. Thank you very much, Sean. Thank you very much for that excellent job, as always, with really sharing with us really how to maximize the use of this harmonic scanner and really how to use it on our trading strategy. Really, guys, that was such an amazing training. It's something that really, when you sit in these type of trainings, it show you how much more you really need to learn and really how you need to adopt the mindset that really I am a student. It's something in this trading of forex is really a profession, guys, just like any other profession. Lawyers, doctors, where people spend a certain amount of time that they really give to learning exactly what it is it takes to really become proficient. And really, guys, we want you all to really remain consistent with your trading, remain consistent with learning. Always really adopt that mindset of I am a student and really operate from that perspective in all that you do. So really, guys, thanks for taking the time for really being a part of this training session. This particular training is recorded and it will be placed on our Billionaire Trading House YouTube channel for those who were not able to make the call. So really, guys, thanks for taking the time again. And you all have a blessed night. We look forward to working and seeing you later on. Take care, guys, and God bless.